Good evening, everyone. Good evening. Welcome to this evening's presentation. My name is Adam from Trade with Precision. Can I just do a check, please, that the sound is good, that you can hear me? And I was going to say I recognize some of the names. Simon Booth, good to have you guys here, and guys and girls as well. So recognize some of the names. Nice to always see you guys returning. Fantastic. Okay, great. So you can see my screen. Yeah, it's pretty cool, actually. Pretty cool. So again, sorry, my name is Adam. I am presenting to you this evening from London in the United Kingdom. And myself, I am from Trade with Precision. And this is part of ATFX's round of webinars. The topic tonight, the title is The Night of the Round Trading Table, Chinks in Your Trading Armor. So pretty cool. I'm good, thank you. I'm good, thanks, Simon. Pretty good. We're going to cover a few things here as well. So before we kick off, there are two disclaimers. I need to give you a moment to review those. For those of you who don't know me, a little bit about me while you read those. I trade both client funds and my own. I'm a trend trader, so we're going to be focusing on technical analysis and trend trading this evening. I'm also a swing trader, which really means that I enter my trades on the daily and or 4 hourly time frame. That'll be the majority of my trades. So I just simplify it by keeping it that way. I can, and in the past have traded intraday, but for the moment, I have a whole lot of other things going on, and so I tend to find myself just looking at the end of the day, or if I'm waiting for an entry on the 4 hourly. So that's predominantly my style of trading. It's also trend-based trading, meaning that I'm only trading markets that are trending. And while we're on that, I am looking, and this is an important factor, is that I am looking at different markets. Very important. Part of the success, I think, it's a personal opinion of mine, not necessarily that of ATFX's or Trade with Precisions, is that I'm of the belief that most of my successes have come from looking at different markets, commodities as well as indices, as well as currencies. There are times when the currency markets for very long periods of time, for example, have not been trending for very long periods of time. And so, whereas I found at the same time, commodities have done very well. So it's always just, for me, it's worked to have an eye on different markets. Also, because I'm generally looking at the daily, it means that I don't have a lot of charts to scan through. I can work my way through most charts because I can start off with just the daily, and that drops it down to about, let's call it somewhere between probably 28 and like 38 charts. It's not ridiculous to be able to do that. And this evening, we can certainly have a look at that. Let's have a look at your comments. I'd love for this to be as interactive, so please, yeah, thanks. No, I'd love for this to be as interactive as possible, so please feel free to ask questions as we go. So the idea this evening is that this is really an open forum. There is no set format. There's a couple of things that I want to cover, but basically the idea is that I'm here to answer any trading questions that you might have. I can go to the charts, I can have a look at stuff. Basically, it's basically anything that you really want to ask, and I can give you the answers to that and hopefully assist you or in any way ideally add value. So I'm just going to go through and just have a look if there's any other things that we need to be aware of. No, that's fine. So that means we'll go through to this. So yes, really effectively, it's an open forum where you get to ask any questions you want. Now, I mean, I'm going to take a shot in the dark here, but you know, I mean, really the goal for most of us who want to learn how to trade so that we can earn a secondary or primary source of income, if we could just get to a point where we know with a degree of confidence that we can definitely make money doing this, if we can just get to that point, then we know that kind of then the rest of it is certainly doable. So my goal is always to get, especially when I'm mentoring people, is just to get them to that stage where they have 1 or 2 months in succession where they actually have made profit. And then ideally that's the point at which they actually ironically don't need me as much anymore, because a big chunk of it is belief. We have to get to a point where we are not going on faith anymore. We've suddenly realized, actually, holy cow, this is achievable. And then it's a question of just gaining enough experience and tweaking it that we become more consistent in our results. And so a big part of that is, for me, this will be personal feedback here. For me, a big chunk of that was having a bit of my background is, I mean, obviously I used to work in the film industry, and I had a lot of technical experience doing that. I'm not a programmer, but I have as close to as much technical knowledge as you can get doing that. And I decided that I wanted to quit. It was becoming very competitive, and the industry was only about 10 years old, and I wanted to get out of it. And I had considered different ideas of ways of which I could generate income, and I narrowed it down to two, which was properties and trading. And I was going to do both, and I have done both in the past, but I loved trading. When I got into it, I started by doing a demo account, no official courses, no programs, not really knowing anything about it because I didn't have any previous exposure to the financial industry. So at any rate, I moved to London within a couple of years of that, and then ended up attending a program, spending a lot of money, as you do on these programs, I got more value than I think people have subsequently got, but looking back, I was just thrown a lot of information. And when really it isn't, strictly speaking, all the information we're given, I think what's almost more important is the order in which we have to apply that information, and we have to, and then the order in which we kind of read that information. And the problem is that in amongst all of that, we have self-confidence, we have self-doubt issues, fear, greed, mistakes, costs. We have a whole lot of stuff that gets in the way of us progressing through that. And then eventually, well, actually a couple of years into that, I was then referred through to Nick, and he had a technical analysis newsletter, which went out. It was a video newsletter for the ICE commentary, which was watched by 25, 30,000 people every week through ICE as an exchange, like the New York Stock Exchange. You have the ICE exchange, and it's the Intercontinental, excuse me, the Intercontinental Exchange. And he did a 3-minute analysis of the US dollar index, and then a 3-minute give or take analysis on the global indices. And I just followed that for about a year before I eventually attended the program. And the difference was that when I attended the program, I'd already done a lot of other programs. And the difference is really that well into, or not just, just a very short period into the program, it became very clear that the tools that they were using were the same tools I'd used in other programs, the MACD, RSI, candlesticks, moving averages, horizontal levels, the same stuff, but there was a different understanding of how to read it. And that really changed everything for me. But a key thing was focusing on trending markets, which sounds like such a simple idea, but once I realized that I had to just not get involved in any way in a market that wasn't trending. And once I started doing that, so now when I look at a market that isn't trending, there's just no way I can bring myself to take a trade in it because I can't see where the money is going to come from. But back then, I would find myself getting into markets, sort of hoping that in the near future, the market would then decide to move in my favor, which is not really the same thing. So this is a big, I think, this is like 50% of the way there, was that I started focusing on trending markets. And once I did that, and I'm going to go across to the platform now, but once I did that, it changed the game. There was a big impact on the way that I found myself. First of all, the market started to be more predictable. So what does that mean? It means that I would look at the technical analysis and go, okay, it looks like it's going to head higher, or it looks like it's going to head lower, and it would. And actually, the reason that the charts tended to fulfill the technical analysis predictions more was because when there's a trend, there is a bias to go in a certain direction until it expires. When there's no clear direction, there isn't really a given direction, and therefore the market can justifiably do whatever it wants. So once I started focusing on trending markets, then the markets tended to do more, they tended to be more predictable in their behavior. Excuse me. And there are different kinds of trends. If we look, for example, at, if I look and throw in, say, pound CAD, go down to, say, the daily, this particular quality of trend that you see in front of you, this is a very, very nice smooth trend. Okay, and eventually that weekly chart is going to become overextended. This is the daily. Eventually the weekly is going to become overextended, which is kind of where it's got to now. All right, and during that period, as it becomes more and more overextended, the indicators, the two indicators, start to show me that the market is not moving down as much as it was. It's losing speed, and that implies that there's going to be a potential change in direction, and you can see it starting to come in now. You can see here it was getting really fresh lows, and now it's doing a shallow low and another shallow low. It's actually, and now it's starting to hit up. So this behavior on one time frame is usually indicative that the higher time frame, the next higher time frame up, is overextended and is now needing to do its own retracement. So if we go to the weekly, you can see it's become overextended away from the moving averages and is now doing its retracement. So all of this behavior becomes sort of normal and understandable, and it occurs because remember that I'm only focusing on trending markets. Now, not all trends are this picture perfect. So if you imagine that you're surfing in the ocean, I was actually in Cornwall this weekend and I saw sets of waves going into the shore, and there's certain conditions I thought, you know what, I think I could learn to surf in those conditions because I could see the waves, but it's not very choppy, it's not very windy. Whereas obviously there are other times when it gets a little bit more stormy, but you could still see the set of waves within the stormy waves. And that's kind of the thing that happens within the market. We can find ourselves finding that there are waves, but it's just a little bit more choppy. It still gives us a sense of where the flow of price actually is. And actually the moving averages help a lot with this. The moving averages, if we take the candlesticks away, the moving averages, at least the 50, 20, and 10, give us a sense, or give the trader a sense of where the flow of price is going. And so that's really what we're kind of following. That's what we call momentum. So although one of the strategies that we teach is called the momentum breakout, just using the word momentum is really just to talk about the fact that the market is showing in its candlesticks. The candlesticks are either really bearish, very bullish, and there's a trend. It just tells us that the market is signaling to us that it actually wants to go in a certain direction, and it's showing up in the most recent candlesticks. So in other words, if we're in a nice, happy, healthy downtrend, we will tend to get really nice bearish candles, and those bearish candles are more significant in a downtrend, and they can often provide us with entry opportunities. A couple of other things then started to fall into place. The fact that I started to focus on trending markets meant that actually now most of the trades I took would go in my direction. Not all of them, but more of them than before. I wasn't stressed anymore. When I was trading counter trend scenarios or all kinds of different types of other strategies, I would stress when I got in the trade because I was like, oh, I bet you the market's going to reverse or go against me. And initially that might have felt like it might happen with the trends, but actually I found that most of the time the markets now, at least 60% of the time, they continued in the direction. So therefore, the market had more of a bias, and that was really nice. So there was less stress there. But the next thing that happened was that I realized I needed to start taking profits. So because now I'm finally making profits, finally, I'm starting to make more than I'm losing. And now the market behavior makes sense because I'm picking a trending market, it keeps trending. There are times when the trends change, but I'm talking now about the overall shift out of every 10 trades I took, there were now more that were making money, and the market behaved and made a lot more sense. But then what I had to do was learn about taking profit. So now that I'm finally starting to get trades that go into profit a lot more often, I had to understand that the market produces thousands of one-to-one trading opportunities every day across the board. But as soon as we go to 2-to-1, it offers slightly less. As soon as we go to 3-to-1 setups, it offers even less and less and less, and it gets exponentially smaller. So what traders understand is that if we're going to do this for a living, we need to understand that it isn't just looking for the setups that's got to become a habit. It's got to be taking profits and putting a stop loss in that becomes a habit. So in a way, all we're doing is finding a pattern, and the pattern will tend to unfold on average, 2-to-1 or 3-to-1 on average. Sometimes more, sometimes less, and we need to take profit as we go. And once I started to accept that I could find the patterns, and I now knew that probabilities are it's gonna tend to go in the direction of the trend. Then I started to realize, okay, the trick then is obviously making sure I take profits and realize that I can be more confident that I will find future trade setups, because that's another thing, is now that I kind of see them happening, now I know I've done thousands and thousands of these particular trade setups where I get in from the moving averages. So price pulls back into the moving averages. I look for a nice bearish candle in a downtrend, put my stop loss above the high of the highest candle and my entry below the low of that bearish candle, and I go in and I take profit at 1-to-1, some of my profit off at 1-to-1, and then I take the rest off at 2-to-1 or 3-to-1. Now, if I'm using terminology that you're not familiar with, so if I say 2-to-1 and you don't know what that means, just ask. Okay, there's no bad questions here. You can ask plenty of questions. But so yeah, I would take profit as I go. But I discovered that now I know, and now of course today I know with absolute certainty that I can make money doing this, way more than I can lose. So although I hate losing trades, and they do occur and they're not fun, they're just annoying, they occur far less often. And they're just a percentage of the trades I take. Because out of every trade setup that I see, there will be some, and this can happen. Here's a setup, for example. It's not the best example in terms of trend setup, but the following, it's a possibility that the following candle could trigger me in and stop me out, and then price goes on in the same direction, and that can happen. That's a legitimate type of thing. It actually happens over here. Here's a really nice setup, subsequently triggered in, if we just zoom in on that. Triggered in here, so this is my beautiful bearish candle, stop loss above the high of that one, entry below the low of that one, and then I can actually draw this in. So what am I looking to do? This is my setup here. I'm looking to place my entry below the low of the candle with my stop loss above the high. I usually take the spread into account. So I will look to take, I prefer to put the spread on either end and 1 pip. So if the spread is 2 plus a pip, it'll be 3 pips above the high of this candle will be my stop loss, 3 pips below the low of this candle, below the low of that. Okay, so because I'm getting in on the 4 hourly and the daily, it's not really a big deal. Okay, it's an additional 6 pips on maybe, let's see what that amounts to. What does that amount to roughly? 50, 59, 60 pips. So it's not, call it 62 pips. I'm just rounding up now, but call it that. It's not ridiculous. So it's fine. And as a percentage of that, it's less than 10% of my setup, whereas intraday would be possibly a little bit higher. So then I am looking to take, for me, and this is my personal preference, 50% of the profit off. So that distance there, okay, that distance there would be my 1-to-1. And so I would look to take profit at 50% of my profit off at 1-to-1, then maybe the remainder off at 2-to-1 or 3-to-1, something like that. And that's it. And that's my kind of average trade. That's what I like to do. In this case, however, I was triggered in by this candle here and stopped out. Sometimes you get lucky. It goes up first and then down, and then you kind of get triggered in here. But it often happens where it's a false start. Like the market tries, fails, there's not enough bears. There's another setup a little bit later. So if I see that one, I can actually take that one there. And ultimately it goes on down. And I'm looking for small or medium-sized candles because I want to make sure that my 1-to-1 or 3-to-1 or whatever targets, 3-to-1 targets are kind of achievable. And if I'm trailing my stop, there's different ways in which we can do it. So the success from this approach, ladies and gentlemen, to recap, comes from, first of all, picking a market that has a high probability of going in the same direction because it's already trending. And then looking for relatively small candles at the right place, which is in the moving averages, and then an entry and a stop loss just behind that turning point, and then looking to take profit at 1-to-1, and then ideally trailing the rest and taking the rest off at, say, 3-to-1. So that's the idea, and just rinse, repeat, looking for that kind of thing. And ultimately, I don't need 10 different strategies. I need 1 or 2. But the idea worked because I picked trending markets. So what I need is trending markets. If there weren't any trending markets, then it becomes problematic. Then it will become difficult to actually do that. And so we look at a couple of these markets. So that's the first thing. Then understanding the moving averages here, really. The 20 and 10 give me an area where price in a trend will often come back to and provide me with a potential entry. They also give me a sense of what is the average kind of overextension or extension that price does before it comes back. So I can get a sense of, relatively speaking, if price is really overextended or not. So that's the first thing. Gives me a nice entry opportunity from that point. The 50 in addition to that just tells me once I've got the 50, 20, and 10 in the correct order, that's usually when the trend starts to kind of take off. Please understand that professional traders, technical traders, are very much a fan of trending markets. Once you become a trend trader, and whether you're managing 5 million or 100 million, you're going to start to want to take advantage of those trends, and it's much less stressful, and your behavior is much more consistent. So if you're a professional, experienced trader doing this for 30 years, the order in which you trade and place your orders becomes very habitual and very orderly. And so trends attract professional, orderly, experienced traders, and it becomes more orderly. So it's quite nice when a trend gets started, it usually starts to look really, really good. So, and also something that's worthwhile mentioning is that when a market is trending very well, it will often, very well on the daily, or moving extremely hard on the daily, it will often almost immediately offer opportunities on the lower time frames. So in patches like this, for example, where it's been moving incredibly well, even for example here as well, so let's draw this in there and here as well, during those periods there are intraday opportunities as well. So if we go down to the 1 hour or the 4 hour, there will be opportunities, sorry, and let's just stop that. There will be opportunities getting in on the lower time frames for day traders, not just swing traders, but even down to say 1 hour time frame, there will be entry opportunities as we go through, okay, during areas where the trend is moving really well. So the rules are the same. For the day traders, they're going to want to have a really good trend in place. They're not going to get in when it's like this. They're going to look to get in when it's trending very, very well, when the conditions look like this. And for them, it will also be a 2-to-1 or 3-to-1 or more potential trade setup. But they can also, due to the volatility that increases on the lower time frames, you can get setups here that trigger, stop out, same kind of thing. But there's a nice setup that ultimately goes on to make its money. This one just manages to make 2-to-1 or 3-to-1. That one does well. That one's just okay. But this is actually a separate setup. It's quite interesting because this is in itself is actually a breakout pattern. This one produces lower highs, coming into this flat level and then breaks out, and my stop loss can go above that high. These are just patterns that we learn that occur in the market, but they work well if we're looking for the right conditions and then look for the patterns. So the trick then is ultimately is about learning to identify those conditions. So if we go have a look at some of these markets, let's just jump through a few, and we can start with a pretty raw chart on the daily and just look at conditions. So what's happening with the Dow at the moment? Okay, so if we just zoom out so we can see a bit more of it. Okay, and keeping in mind that horizontal levels are absolutely crucial. This is really key. So the differences, when we talk about the differences between certain markets, okay, well, let's talk a little bit about the differences between currencies, commodities, and indices, for example. So first of all, the stock markets, equities, and indices tend to over time go up. They generally do. More people on the planet, money being invested, growth, they tend to go up over the decades, every 10 years or so, they tend to go up. And so they have a tendency to lean to the upside, especially in today's world. There's a lot of people with money, and those people are buying at these key levels. And so this is why often the price will bounce at a significant support level. So there's one there. We can see price reacts to it and immediately comes down and bounces right up. So a lot of people have lost money because they've been shorting the market here, and they're selling at the point at which price bounces and then goes right back up, because we're still predominantly in a bull market. Okay, so, and there's bounces, these areas kind of tend to be there. So we've got a lot of these, and these areas are kind of around to stay. We've got a couple a bit thin on the ground up here, but there's definitely a few. Let's go in and have a look at this. There's a possible area there. So we have quite a lot of areas here at the moment, and this is the Dow. So this is the US Dow. What's significant about the indices, as I said, is that they tend to go to the upside. More often than not, they'll be 60% bullish and 40% bearish. So although we can have market corrections and bear markets and market crashes, so to speak, the natural tendency for the most part is to trend, and most of the time to trend to the upside. So I'm a big fan of the indices because they tend, there's, a lot of people think that there's a lot of incorrect statements out there. Things like, well, the US dollar and the stock markets and gold are all inversely correlated and all these different things. And those kind of things are not technically true. There are statements that people believe are true without actually ever verifying them. And one of the things happens is that people believe that the markets tend to go sideways 90% of the time. And that simply isn't true for stocks or equities. They actually tend to trend more often than they go sideways. They do go sideways, but they trend a lot more then they end up going sideways, and that's evident in their history. So that's often the case for indices. And generally speaking, if I was a gambling man, and I'm a trader, which is not gambling, but if I was a gambling man, I would buy and hold rather than sell and hold. I wouldn't short the market. So because again, that's going kind of against the flow. So the moment you could see the difference in the market's behavior during this period, which is, this is 2018. So that's 2018, and this is 2019. Up here, we can see there's actually a subtle difference between those two. I really should change the color of the boxes. Versus 2017 all the way up. And that's because effectively the market's exhausted. It's just too tired, and it's needing to take a bit of a breather, which is why the size of the candles, if I just go through and get rid of these two items, the size of the candlesticks has got bigger because the volatility is increasing, meaning that people are stepping out of the market. Suddenly it's becoming a lot thinner in terms of liquidity. It's still, there's no problem with volume, but it's just a lot watery compared to this, where it's kind of like a thick soup, just because everyone's kind of mostly in the same direction. And it's going to stay this way for a while, but certainly it's got a lot of bulls in it and a lot of bounce. So this is a very important kind of component in it. Then if I look at commodities over time can, if we look at gold, for example, so gold, if we certainly bring that out to a weekly time frame, and then switch it over to candlesticks, you know, gold, commodities can be in demand. And so they have their own sort of behaviors as we go through things. They have their own behaviors. And currencies, but beautiful thing about commodities, they can trend incredibly well. And they're very underappreciated, in my opinion. Commodities, including all kinds of things. But gold and silver and oils can be really, really worthwhile trading. They can trend really well at the moment. For example, the gold's on, oils aren't trending very well, but they have been in the past, and they will trend again going forward. So if I go through to, I can see questions and I'll go and answer those in a moment. But if I go through and have a look at some of these markets and just chuck on oil and then have a look at it, yeah, we've had a bull trend recently in terms of the monthly there. So if we just go to that weekly and zoom out a little, there's been a very nice trend to the upside here. And at the moment, there's no clear direction. So another thing about trend trading is knowing when there's no trading opportunities. And right now, there are no trading opportunities here. Right? The market is on top of the moving averages, meaning that the medium term and the shorter term averages of price are all on top of each other. So there's no clear direction at the moment. The market doesn't really ultimately know what it wants to do at this point in time. It was trending. It is not trending anymore. So all that means is I don't have to worry about it for the next few days. So although if you look at the list on the left, this is my complete list of instruments that I trade. So that's something in the region of about 20, 27, let's go 28, 29, 30, 31, 32, 33, 34, 36, 37, 38, 39, 40. 40 charts. I think I mentioned that earlier, about 40 charts. And that's everything that I can trade on this platform here that I get access to. So the point is, there's nothing to trade in this for now. It's a weekly chart. I can keep an eye on it, but even the daily, this is a mess. Price is stuck completely within a range. And so there's no real money opportunities to be made here until price breaks out of the range below or effectively starts to trend outside that. But then it'll move. So the longer it's in a range, the more it gets cooped up, and then eventually it gets out. Let me have a look at your questions, and then I'll come back to this. So the indices, so I'm just reading the comments, the questions out loud. Let's have a look at this. The indices are trending most of the time. Which time frames is the most valid? That's a great question. So if we go and have a look, generally speaking, I'm looking at the daily or the 4-hourly for the most part. So what I'm going to do here is throw on the US indices. Also, another thing that's worthwhile thinking about is, although I'm based in the UK, I'm not trading the FTSE because I live in the UK. For example, what I need to be focusing on is trading what trends really well. And that's another kind of, we get all these little weird little ideas in our head, like trading Barclays because I have a Barclays bank account, or trading it's a very, and then we get confused with investing because our friends are going, well, I'm investing in Glencore and I'm investing in Facebook and this and that. We need to be looking at them as traders. We need to be looking at them as purely, are they trending? That's it. And if they're not trending, because trading is a way to generate income or cash flow in the same way that a day job anywhere else is. Okay, it has a higher risk, higher return. It's a technique, it's a learnable skill, like learning a language or a musical instrument or professional sport. But it is another way of generating income. Like anything else out there is a way of generating income, but it's not to be confused with investing. Although some of the skills are transferable, in other words, somebody who is a property trader who buys and sells and flips properties can use that knowledge to buy themselves a home as an investment as well. Their knowledge is transferable, but it's not the same thing. When they're buying properties, they're almost certainly not looking at them as long-term investments. They're looking for different things where the value is. With trading, we're looking for trends to get our value, to get our money. With investments, yes, we'll be looking for trends, but the trend doesn't have to behave exactly the same way it does for trades. So it's a slightly different approach. Anyway, my point being, in answer to your question, the time frame of this, if we go and have a look at a few of these markets, I want a really nice strong trend. And if I'm looking at it on the daily, for example, I'm looking for conditions that look very much kind of like this. I want nice little steady conditions that where price is interacting very well with the moving averages, and I'll probably be able to get in and out every other week and take profit as I go. So that's the one thing. Let me get rid of these objects and get in and out. Now, in those particular cases, as in here, there are also entries usually on the 4-hour time frame. So let's go down to that 4-hour. So the 4-hour at this point in time is actually doesn't trend as well as it probably did in the past. So going back here, that downtrend has got a really nice 4-hourly chart, nice putting back into the moving averages, heading lower, and the uptrend had a really nice quality trend on the 4-hourly. So that works well. This time around, not as good. So if the chart doesn't look really good on the time frame I want to get in, then I can't get in. Okay, as in I just don't get in, I get in on a higher time frame. So going back to it as well, so basically what will happen is that traders will find themselves, depending on the quality of the trend, traders will find themselves automatically heading towards a particular time frame, either on the lower side or the higher side. So if we look at these, look at this time frame now. This is on the 4-hourly, but it's actually not looking. If I go down to 30 minutes and have a look at that current one, so let's just do this. There we go. If you look at it now on the 30-minute, that actually looks pretty good. Look at that behavior, it looks pretty good. And that looks pretty good. So even down to 15-minute potentially. 15-minute looks pretty good. So I'm looking for the structure, ladies and gentlemen. The structure is key. I'm looking for a stable, repeatable trend, ideally. And so what this means is the trend currently is probably more suited to day traders, but professional day traders are aware that when you go up to the daily, the trend is a lot more volatile. So what that means is that day traders are trading it on the lower time frame, but they are also admittedly aware that right now the trend here is not as smooth as it was here. So it means that they either trade it or don't trade it, but if they do trade it, they are either potentially more defensive about their stop losses or taking profits, and others they're more they'll be faster to take profits because they're aware that the risk is higher. They might reduce their risk, so maybe they drop their percentage risk per trade. There'll be things that they do that say to them, okay, the conditions are rougher, but they're still there. There's still an underlying trend. It gets easier when the conditions look like they do here, and currently they just don't. So in answer to the question is, what I trade it now? Only perhaps on the lower time frames, and only if I had nothing else to trade. So the first thing I do is go through the rest of the charts to see if there's anything else that's trending right now, and then failing that, I can go back to charts that might offer some different time frame opportunities. So that looks pretty good. So that just means that those opportunities are there on the lower time frames. During these conditions here, the time frames could be as fast as 5 minutes. The market might be moving so aggressively that it's happening on a 5-minute time frame. So what I'm going to do is remove the objects and highlight that again, just quickly, and highlight these patches again and go have a look at them. So for example, this patch here, okay, is an example of a nice healthy trend, because actually we've had it We've had it over here as well in the past. So when we're trending really well, we'll see that kind of thing happening. And the markets will always go through corrections and bear markets and more, kind of scary phases. And they have, for the last 100 years. And they'll always be for various different reasons. Right now, everyone's pointing the finger at, the trade wars with Trump. But the market will often find an extreme. At some point, the market becomes just too top heavy. There's buyers, but no, there's not enough buyers eventually, and then people start selling and then panic. Okay, and that happens in every market. At some point, it's supply versus demand. So I want to show you this on the 5 minutes, but I also want to show you this on the 5 minutes. Okay, these patches here, where it becomes quite aggressive on the lower time frame. So we go down to 15 minutes, for example. We'll just quickly jump to the front and go and have a look at these patches. So obviously I'm going back in minutes here, but you can see that when the market is moving really quickly and you're experienced, you'll want to get in on the lower time frames. And when the market's very bullish and you've got a couple of choices actually. I can, if I want, I can take the end of day, and if I have nothing else to do that day, I can go to I can trade intraday as well. So basically the point being is if I have nothing else on my calendar for the day, I don't have to meet with any clients, I don't have to do any research, I can actually go, you know what, I'm going to trade the US Open. And all that means is that for the first half an hour of the market opening in the US, which is about 2 o'clock, 2:30 our side, the market will open and start trending almost immediately, whether it's to the upside or the downside. And then I could look at those. But again, that's very fast moving. It's like driving into, it's like getting in a car and you've just got your driver's license and you get on the highway and drive it, at peak traffic. It's a lot of information happening very quickly. So I wanted to show you this. I'm going to go back now. So I'm going to go further back to that previous patch, which was, we're going back now to 2017. It's a lot of 5 minutes. Go back to 2017 and look for those conditions. And this is just too choppy. So if the daily is not trending really nicely, it's not worth the stress. I guess the key thing is understanding why, the kind of conditions that can cause us problems. Anyway, so here we go. We get to the 5 minute time frame going back to 2017, around about that time. And this is pretty choppy for me. There's some good patches, fine. But in this case, I'm probably going to go more to the 1 hour time frame. A little bit better, more to the 4 hour time frame looks very good. So that's the point, is I'll be focusing on the periods of time where that trend is looking more reasonable, more predictable, and take advantage of it. So the theme that I'm talking about now is the conditions we trade matter. If we focus on the conditions, then we won't be surprised when things appear to go more in our favor than against us. Then it's up to us to not do something stupid, like increase our risk, not trade with a stop loss, trade the news. All these kind of things take the predictability of an orderly trend that's just doing its thing and mess with it. Trading the news is ridiculous, because if the news is very much unpredictable, we don't know what it's going to do to the markets, and it can do that. So if we run through the markets, just looking at the daily, and just run through a few of these. So we look at the Dow, no clear conditions now. So that means for the next few days, I'm not going to stress about it. So, okay, we've got that. This is now the NASDAQ, which is quite bullish. Look at it on a weekly basis is also quite good. If I look at it on a weekly basis, I would say it's looking nice and bullish. It's looking nice and bullish, but also undecided. So there's definitely a lot of buyers in the market, and I want to keep an eye on key levels. I need to know where price, if it starts breaking through here, the way the market works is pretty rational in many ways. If it fails to go higher, it gets scared, because why isn't it able to go higher? And then it starts to panic and it goes lower. Then the buyers are stepping in here. Now, if you've got a lot of money, if you made a lot of money on the way up here, you're basically wanting to buy at a discount. If you can think about it, the next time there's a property crash and you had a lot of money, would you not be looking to pick up properties at a discount? So everyone who's got lots of money is looking to buy certain favorite equities or stocks at a discount. So they'll have buy orders sitting with their brokers or themselves at key levels. It's very important, because that's why we'll get those bounces. The fact is that the market might bounce, but there might not be enough buyers to carry it above a certain level. So then it goes down. There's more buyers sitting in here because they're buying at a discount. So basically, if I had unlimited funds, I would just keep buying at key levels on the way down, because I know that once it starts coming back up in my favor, I bought at all the discounts that were available, and I'm going to make it back. And obviously that's when you have deep pockets, but that's what people like to do. Oh no, somebody's saying there was a high-pitched noise in the background. Is it gone now? Just let me know. Do you still hear it, or is it gone? Because if it's gone, I think it was the fan from my machine. The fan came on. If you could still hear it, then if it's gone, yeah, I think it was the fan. The fan came on, so sorry about that. It's quite warm up here in the office. So, okay, so next thing. All right, so next thing, I'm looking for certain conditions. I'm going to go and just remove these levels again. We've got the FTSE 100, which is a lot more choppy overall. So I'm very concerned about that. Doesn't mean I wouldn't trade UK stocks. It just means I maybe wouldn't trade the FTSE 100. The DAX, this is a Germany 30, also pretty volatile. And again, the higher time frames give me a really big clue as to what it's looking to do. Okay, if it's looking more bearish or noisy. The last 10 or 20 candles can give me a good indication. Like here, it was in an uptrend on the weekly, uptrend, and now it's broken those lows. So there's certain things where it says to me, okay, I was in an uptrend, high lows, high highs, I've broken the low, therefore this trend is now, because there's got to be a point where an uptrend is done. You know, you go, okay, it's past this point, this uptrend is now finished. What's next? Okay, well, the market's either going sideways, okay, now it's trending again. We need to be able to have lines in the sand where we go, if it does that, now we can say it's trending up again. And so in this case, because we broke that previous low, we can generally say that this uptrend is now finished. So now we wait. What's going to happen? Are we going to produce lower highs and lower lows, or are we going to go sideways for a bit and then go back up? What are we going to do? But right now, it's not tradable in that sense, because it's just finished this uptrend, and now it's trying to decide what to do next. In the same way that there was an uptrend here that subsequently got broken, and then the market ultimately did like a sort of a head and shoulders pattern and went lower. So that's not clearly not trending right now. The French CAC also not really trending, and you can see it's got a nice little bit of resistance actually up there. It's had a couple. Is it possible to get two resistance levels close to each other? Yes, it is. Sometimes they're further apart, and sometimes you can get a couple close to each other. It doesn't happen very often, but it does happen. So it's okay. If I feel that one level looks like I'm like, yeah, I think that's a level for sure, but I also want to say that's a level, fine. And an interesting little exercise that can sometimes be very interesting is switching it to a line graph, just the wrong color. So I want to go change that color. The line graph, I want to go make that a bit dark or something pink so that I can see it. Okay, so that little line there, if you can see that, and that can often help me identify key levels. So sometimes I could bring that one down, sorry, bring it down to about there. This one I might want to say is down, bring that down to about there, but it can sometimes help to identify key levels. If I then put that up, for example, there, and then switch it back to candlesticks, it helps identify those levels. That's a nice little, not always, but it can help sometimes when I'm not sure where. Like here, if I look, what am I going to do over here? Where am I going to put price levels? So switch it over to a line graph. And sometimes those levels can become a little bit more obvious. And I can say, okay, well, there's definitely something there. Here's a case where there's a couple close to each other. And, you know, something over here, for example, there's definitely something there. And something about there, for example. There we go. Switch it back onto candlesticks, and that helps me identify those levels a little bit better. So that's pretty cool. Again, I've drawn a whole lot of levels I need to get rid of now. So let's just go through and just get rid of these things. Let's have a look at the Nikkei. This is Japan. Also looking a bit unclear at the moment. So to give you that sense of what it was like, that's how it was performing. This is how it was. It's currently very unclear about what it wants to do. If you look at it from a monthly perspective, it's just sort of coming into the moving averages here. If we go back and have a look at these again, the monthly gives us a good indication of where we are. If the moving averages, the 10 and 20, give us a sense of perspective, we can see where we are at the moment. There's definitely strong resistance at the moment on that, so some concerns. The German DAX, back there, we're still almost in a downtrend, lower highs, lower lows. The UK 100 there. And then when you go back to the US markets, you can see how bullish the US markets are. And another thing to take away from this is this clearly means the US markets have had incredible growth the last 10 years, just immense, like just fantastic growth when you compare their markets to others around the world. There's been some growth, but definitely not as stable and as clear as the US. The US have scored very, very well. Looking here at the ASX, that's done quite well actually recently. That's Australian one. That's actually coming back into the moving averages now. But another thing to keep in mind is understanding key mechanics. The US economy is the biggest in the world, okay? GDP of 19 trillion. Next closest is China at 13 trillion, 12, 13 trillion. The UK sits at 2.7 trillion. Then you look at the US dollar, it's in 90% of the transactions on the planet. Once you throw in gold, commodities, oil, that kind of thing, it makes up something like 60% of the currency market. So we need to understand that the US economy and the US dollar are a very big cog in the markets. And so we need to just be aware of that because it changes the way we might look at certain things. It means we have to take them seriously. I don't know if that's actually strictly speaking true that the US dollar is 60% of the currency market, but it's big. It's a big chunk of that. Could actually be a bit more. So that's just something to keep in mind. It also means that if the US indices, the US economy gets a cold, everybody else gets sick. Okay, it just is that big. It's very unusual for a country's economy to do well if like the biggest economy in the world gets sick. Okay, everybody tends to suffer from that, and that goes all the way back to 1929 stock crash. It impacted everybody, so we need to be aware of that. Commodities also can actually do us pretty well. So oil at the moment, as I said, no clear direction, especially from a monthly perspective. We were in an uptrend, we've broken that. We've got a low and a high and a higher low, and it's all over there. No clear direction. The UK one, so there's Brent and West Texas. This tends to be Brent. No clear direction at the moment. If it breaks through that, then we'll start heading lower. If it breaks to the upside, we can start trending higher. There can be shorter term trades if it starts trending nicely, but the real bigger moves will occur once it breaks out there. Anyway, so we look at silver. Silver is looking very interesting to me because it is starting to break to the upside. It's now in an uptrend. It's got some resistance levels I want to be aware of. There's definitely some key levels I need to be aware of. But there's also a nice level of support. And if gold is going to climb, silver is almost certainly going to climb as well. Certainly once silver breaks free of this noise that it's been in for a long time, it's going to start to move. I think you can hear that whine again, a high-pitched whine. So that'll be the fan if that is the case. So, sorry, I'll try and move my laptop away so it doesn't do that as much. And then we've got gold, and gold is blossoming very nicely. It's got a really nice resistance level. It's broken through. It's got another key level here. You can actually see they stand out pretty clearly, close to 1560. It's got to get to that. And we'll likely see it pull back to test this level. So for me, I'm waiting for some buy opportunities at about that level. That would be nice. Anywhere in that area is quite nice. There might be another area over here where it starts to come in about that area. Okay, so about that area, somewhere around there or there, I'll be looking for buy opportunities. The weekly is going to have to come back at some point. Daily's looking, you can see if you go to the weekly, weekly's potentially looking to retrace back into this area or back to that area. So those are the kind of things that where those opportunities lie in terms of commodities. And I'm taking my time, but I'm showing most of you everything that I'm going through here. Let's just go through that. And let's just get rid of all this. So we've got, then we look at currencies. We look at euro dollar. There's that weekly. It's drifting lower, but it's messy. That's too choppy for me, those conditions. That's just insane. There's no reason to trade euro dollar, honestly. I can't imagine anyone who would say to me, yeah, you should be trading euro dollar. It just doesn't make sense on this time frame. Possibly someone might go, yeah, but what about that? They're like, okay, but now if I'm going to trade that, it's got to be because there's nothing else that's there available for me to trade. This is that daily. This is just very volatile, very deep. We get these conditions when there's almost the same number of bears and bulls in a market, almost. In this case, there's probably 55% bears and 45% bulls. So it goes down, then it comes back up. Then it goes down, then it comes back up because they don't really know where they want it to go at the moment. Comparing that to cable, look at this. So that's much more bearish. So instantly that tells me that GBP is possibly weaker than the euro. So if I look at other GBP pairs, are they also trending lower? Yes, GBP CAD is. GBP Swissy is. Okay, that's looking good. It's back into that sell zone. Nice little look at that bearish candle there before it headed lower. Very nice. Is pound yen heading lower? Yes, it is. So there's a similarity between all the GBP pairs where clearly the pound is weak, and those are the charts I want to focus on. I don't have to think about why the market is moving lower. What I need to do is to be able to identify it is clearly heading lower. And also it's a bit overextended. Same thing as we saw with the other charts. It becomes very overextended on the weekly, and it's now looking to do a retracement and come back up. Okay, it's something worth identifying. Pound Swissy is doing the same. So almost all of them have had a very good run on their daily timeframes. They need a weekly retracement, and then they'll probably resume. So what does it mean? It means probably for 1 or 2 or 3 weeks, it'll head upwards into maybe some key levels of support resistance, and then potentially turn around and then carry on down. So I'm looking at maybe the downtrend resuming September, October, somewhere on there. Going back to this. Okay, going back to this, you can see also that support level for GBP CAD. And wow, it shows how long I've been trading for. I'm showing my age, but I was trading this back in the day, selling at the top, buying at the bottom, and the breakouts. And these are monthly charts. Holy cow, that goes back a while. Okay, so looking at a few of these things, if I compare that to the euro charts, I go back to the euro charts and I go, the euro chart wasn't trending as much. So what do the other euro charts look like? Euro CAD. Euro CAD's not trending as much. Euro Swissy is trending very well. So therefore Euro Swissy is where I'm going to be looking for entry opportunities. So again, it's about creating that watch list of what's trending. Euro GBP trending, but kind of now done a bit of, look at that weekly. So what you've got here is a weekly correction, and you can kind of see where it's probably wants to come back into those levels. Maybe a bit lower, possibly a bit lower. Do we use Fibonacci? Absolutely, we use Fibonacci levels. So let's go in there. Absolutely, we use Fibonacci levels. I would count this as a possible Fibonacci. So from there up to there, possibly, let's just say, include it in. And I'm looking for areas where it might overlap. Okay, so that area possibly in here or in here, that would be a 302 or 50 or a 618, even down to here, which is interesting because here it starts to overlap with other support resistance levels. Let's have a look at that. Okay, just areas where I'm looking for things to overlap. So anywhere in these areas I could find the price might come around, but it also means that I might have to wait if I want them to turn around. Anyhow, so is that Euro yen? We saw that was heading lower. That's trending nicely. Euro kiwi, no. So almost all of the GBP charts are heading lower. So that's a common theme, is that the pound is weak. But when we look at the euro charts, some are going up, some are going sideways. So Euro GBP is retracing now within an uptrend. Euro Swissy is heading lower. So that tells me that the euro doesn't have a theme. It's not necessarily bullish or bearish across the board. It has different strengths and weaknesses depending on who it's trading with. There will be times in every currency's future, I guess, where you will find that it is trending, that it goes into its own particular mode, where the pound right now is so much weaker than anyone else that trades with, that the theme that you can see across the board, it's pretty much heading lower. Aussie CAD, the moment looks as though it's heading lower, so let me get rid of these objects. And we've got Aussie CAD trending lower. We've got Aussie Swissy trending lower. So I find that interesting because Euro CAD is also looking a bit bearish. Look at that, breaking in, bearish candle. Moving averages are starting to fan out. So this looks like the beginning. It looks like the beginning of a downtrend. Euro Swissy is heading lower. Okay. Aussie CAD and Aussie Swissy are heading lower. Kiwi CAD is trending down, and Kiwi Swissy is trending lower. So that tells me CAD and Swissy charts are heading lower. What about Kiwi Yen? Kiwi yen looking nice and bearish. What about Aussie yen? Aussie yen's looking nice and bearish. Okay, so these are good. Most of these are really, really good trends. What's dollar CAD doing? Dollar CAD is not trending that well at the moment. Dollar Swissy, not trending that well. Okay, compared to some of the other pairs. Dollar yen, trending lower. All right, I'll keep an eye on these levels. Definitely want to just be cautious of what's going on at those levels. But yeah, looks like it might pull back in and then head down. What's CAD Swissy doing? Not really going anywhere. So you can tell almost at a glance which ones I should be paying more attention to. CAD yen, and I'll do this every few days. So if one of them starts trending, I'll see it. But it means I don't have to obsess about it all the time. This doesn't look that great to me. So this is Swissy yen. If I go down to the daily, you'll see it's very choppy. So you could tell basically by looking at the last 10 or 20 candles, they haven't gone anywhere. They're stuck within this box. And when I look at them on that lower time frame, they're immediately very, very choppy. Okay, and so that is something worthwhile keeping in mind. And dollar Sing. So dollar Sing is trending at the moment. There we go. And look at this patch as well here. So if we look again at that and go straight to the 4 hour, straight to the 4 hour, 4 has got trending opportunities. So this is experience talking. You kind of work out when your daily is moving but not coming back to the moving averages. You look at the 4 hourly as well. So the 4 hourly would potentially allow me to get into that trend, but allows me to get into the trend. But yeah, but I have to just be aware of that. So I did write down some notes. What did I do? What was this one here? So I wrote down this stuff here. A couple of books that are worthwhile reading. Trading in the Zone by Mark Douglas. If you haven't read it, you really need to read it, because you need to find out that there are universal experiences that all traders go through. Things that you might think are personal to you, you will find out that actually every trader's gone through them. And he passed away, unfortunately, a couple of years ago, while Nick was discussing getting some mentoring with him for the TWP guys, and he passed away, unfortunately. And also the Market Wizards books, there's a series of them by Jack Schwager, interviewing all kinds of traders from all around the world. Phenomenal, very cool. But those are great. I was talking now tonight about price action, focusing on trending, understanding the difference between trending and not trending. Spoke about candlesticks being bullish or bearish or indecisive. Horizontal levels being, price will tend to move from one level to another. So I'll look at the monthly and the weekly and highlight those key levels, and then look for trading opportunities when price is trending nicely from one level to another. And looking at higher time frames, that's the monthly, weekly, and daily. The moving averages become a guide for me as to where I can look to get into a trend. And they give me a sense of when price is overextended, depending on how far away price is from that. And trade and risk management, I spoke tonight about taking profit, the importance of taking money off the table. The stop loss is only there to protect our existing capital. So it can help reduce the damage from losing trades to our existing capital, but it can't grow our accounts. We can only grow our accounts if we take profit. And so taking profit is a conscious act. It's very, very, very important. So just going back to this quickly here, if you're new and you're not familiar with ATFX, just want to introduce you to them. Obviously, they are regulated by the FCA. That's the Financial Conduct Authority. There's the license number if you want it. Obviously, easy transferring funds in and out of the accounts using the MT4 platform, which you've seen, which is great. It's very easy to use, very reliable, steady, sturdy. And if you need any assistance, of course, you can always contact them. So I quite like the group. They're based in the city of London, and just because I say they're relatively new, they're not a new company, they're just new in the UK. And of course, if you do have any questions, and they're actually not even that new, we're going back a couple of years now. If you do have any questions, please feel free to email them or call them with these contact details, and I'm sure they'd be very, very keen to help you. So ladies and gents, we've come to the end of tonight's presentation, and I wanted to try to do a bit of a brain dump on trading, all my experience, my personal experiences, and transfer as much of that through to you as I could in 60 odd minutes. And I really hope that you have found that interesting and of value. Otherwise, what I'm going to do now, I want to say thank you for your time. I love the questions and the interactivity. I am going to end the webinar now, which is going to hoof all of us out. And I wanted to just say, yeah, that I hope you found it useful and instructive. I've enjoyed it, so thank you very much. And I'm going to end the webinar now, but I look forward to seeing you in future webinars. And again, this is being recorded, so if you do want to get access to it, I believe the recording will be uploaded, and you should be able to get a copy of it if you want. Great. Well, thank you very much, ladies and gentlemen. And yeah, enjoy the rest of your week. So thank you very much. Good night.